I've been always wondering why the stock market has been going down lately this week. That's right, I'm going to be sharing with you my data analysis project that I worked on about NASDAQ, about revealing the historic stock prices. Hey guys, welcome back to my YouTube channel. So in this video, I'm going to be sharing with you my data analysis project that I worked on about comparing stock market prices. And I decided to use NASDAQ, which is a popular stock index. And this is something I wanted to share with you. Also compare its historical and market trends. So with further ado, let's get into it. Alright guys, so here's my project that I worked on. You can see the title of my project is Navigating NASDAQ, Investigating Historical Stock Prices and Market Trends. You can see I also put the stocks logo in the background and also NASDAQ. And if you didn't know, NASDAQ stock market is a leading American stock exchange and it's second only to New York Stock Exchange. The objective of my project is to delve into the intricate details of stock price volatility and investor sentiments through data analysis. By utilizing SQL for data manipulation, Power BI for dynamic visualization, and R for statistical analysis, the project seeks to uncover valuable insights and trends in the stock market. By identifying correlations and key factors driving stock price changes, investors will be equipped to make informed decisions amidst the ever-changing market conditions. And at the end of the slide, I'm also going to provide some conclusions. I'll provide dissecting each of the following and giving some analysis. And throughout this project, I'll also provide different graphs, bar charts, and visualizations. So that will be fun and interesting to share with you guys. I'm not going to read through this, but this is a storytelling. And basically, a storytelling is basically a way for me to get my audience engaged by capturing the audience intentions and to convey a complex data insight, engagingly and understandably. And I thought this would be useful when working in data analysis, not only in data analysis, but data science or any job you're working in. But this will also provide content to data, highlighting why certain data points are important and how they relate to broader business objectives or challenges. You can read that to yourself. And the questions to keep in mind are, what are the historical patterns of stock price fluctuations for certain asset companies? Can time series forecasting models accurately predict future stock prices or market trends? What factors primarily influence the volatility of stock prices for the companies? Can we pinpoint times of significant volatility and link them to specific events or news? And how accurate are various models in predicting future stock price volatilities? I thought these 5 questions were important since they're related to stock markets, especially in NASDAQ. So keep in mind when it comes to when I provide this information in slides. So here's where I got the dataset and the software I used in this project. I used Yahoo Finance, and I thought Yahoo Finance is significant and important in a comprehensive platform offering financial news, and also provides data analysis, and I can even download the Excel file. That's where I got it from. So I named it as Stock CSV, and throughout this project, like I said before in the slide before, I used SQL, Power BI, and R. So to begin, let's start. So we can see that we have the data collection and preparation using SQL, and this for the first part shows me querying historical stock price data. So here it is. Oh, and I forgot to mention this, but basically we can see that the date represents the date of the trading day. Open is the opening price of the stock at the beginning of the trading day. You can see that the high is the highest price at which the stock traded during the trading day. The low is the lowest price at which the stock traded during the trading day. And we see the close is the closing price of the stock at the end of the trading day. And the adjusted closing price is the account for corporate actions such as dividends, stock splits, or mergers. And the volume is the total number of shares traded during the trading day. You can see I calculated the daily returns, and this is the output. But I didn't want it to share, it was so big, I just wanted to share with you just the first three outputs. So we could see that the previous price was 123.3, and also the daily returns too, and the closing price. And here's calculating the volatility or the standard deviations over weekly periods. And here's the output for this. See, like I said before, there was so much, the output was so long, there was 251 sets. So I just wanted to share with you the first three. And you can see that the first, starting with the beginning, doesn't include that, only starts after it, the week after. So you can see that it's 0.22, 0.251. Now here's the stock price movement I use using Power BI based on the code I use in SQL, but here's a graph interpretation. And here's the graph that shows the NASDAQ stock movement from May 2023 to May 2024. And basically I created an area line chart in the shaded area, and it's used to visually show the magnitude of the change over time. It's also helpful to show the volume and trends of the data more clearly. And throughout this graph, I also noticed that the graph shows fluctuations throughout the year. And I can visualize and see that there is a clear upward trend in the closing prices over the time period. So you can see that dates here on the x-axis and y has the closing price. So I could see that the NASDAQ starts at the 120 mark in May 2023 and steadily increases all the way up to 180 by May 2024. And this indicates a significant overall growth in the index. And despite the upward trend, I also noticed some drops. For example, there are declines around August 2023, as well as in November 2023, and a few others throughout the points, like over here. And these fluctuations indicate periods of market corrections or reactions to specific events. Now here's a daily returns and volatility over time using from May 2023 to May 2024. And I created a line chart for this one. And I noticed that some observations I can see which came to my mind when I saw the graph. First, I can see the volatility and the daily return fluctuates around the zero line, indicating periods of gains and losses. And the height of the spike indicates the level of volatility. And I also noticed that there are negatives and positive spikes throughout the year. So first, in November 2023, there was a significant, huge drop, which was negative 0.1. And then in January 2024, there was another big drop, which was negative 0.07. And in May 2024, well, this wasn't a drop, but this was a big increase. And these spikes indicate that there was events or news during these periods that caused unusually high volatility in the market. While the graph doesn't show an exact upward or downward trend in returns, it highlights that NASDAQ experiences substantial daily variations. And we see that it suggests an overall volatile market. And overall, you can see that the graph shows significant fluctuations in daily returns, reflecting a dynamic and possibly unpredictable NASDAQ during the years. And here's a bar chart that shows the sums of the NASDAQ, which provides a visual representation of the aggregate stock price movements over time. And this would be allowed for me to compare and analyze monthly trends. And if you know, this here is still I started from May 30th, so this is not really 248. If you notice, that's why I compared. This is the other months have a higher sum of closing price, which are in the 2000s, 3000s. But each stack column, we can see that the column shows the breakdown of the total price movement for that month. And we can see that the height of each column show its movement. And using my analysis, the proportions of each segment within a column can provide me insight into which components contribute more to the total stock price. In this case, I see that April has the highest sums for that particular month of the sum of the stock movements. And this means that a total stock price movement indicates greater volatility in the market, where volatility reflects the degree of variations in stock prices over time, and it can be influenced by factors like markets. But overall, a higher total stock price movement signifies a higher dynamic market environment, which may provide more both opportunities and risks for investors, depending on their investment strategies and objectives. And here's a time series analysis, forecasting, and correlation test using R. You can see there's the code I put here. You can see that the autocorrelation functions, it serves for its various purpose in analyzing time series data, particularly in the context. In stock markets would be useful, and also in other relations. But basically, it identifies relationships, and we can see by measuring the correlations between a time series and its past values, the ACF helps to discern whether previous stock prices influences current prices. It's also useful for selecting models, meaning that the patterns observed in the ACF aid in choosing appropriate time series models. So, for example, we could see that on the y-axis we have lag, and the x-axis we have lag, and y-axis we have ACF, and we can see that if there is a substantial correlation at lag 1, but not at other lag, it might indicate that a simple auto-regressive AR model is suitable for capturing the data's behavior. It could also be validating assumptions, meaning that the AFC plots assist in confirming the assumptions of time series models. And in a stationary time series, autocorrelation should diminish rapidly as the lag increases. And also for forecasting, autocorrelation's insights are instrumental in predicting future values of the time series. And you can also see that the blue dashed lines indicate the threshold for significance. And the threshold often sets basically at positive or negative 1.96, and it's divided by the square root of the number of observations, which helps determine if autocorrelation values are statistically significant. And like I said, on the x-axis, it shows a specific lag showing the time interval between the current observation and its past values used for comparison. And the y-axis, like I said, represents the autocorrelation coefficient, measuring the strength and directions of the linear relationship between the current observations and its lag values. And the vertical lines, obviously, are denoting the confidence interval. So points lying outside these lines suggest that the autocorrelations of these lags is likely not due to the random chance, indicating a significant autocorrelation. And we can also see that we also have a forecast graph showing the anticipated values projected by a forecasting model for a set. You can see that the projected values in the graph primarily showcase the forecasted NASDAQ stock market values. You can see we can see how we have all the data points that represent the anticipated value for a particular time slot ahead, and we also see the point forecast, which is the central solid line, which denotes the model's best estimate or point forecast, and it signifies the most probable trajectory of the NASDAQ index deriving from historical data and modeling assumptions. And we can also have prediction intervals, which are the shaded regions surrounding the point forecast, which is up here, also known as the confidence interval. And these areas offer a range within future NASDAQ values are likely to fall, with a specified level of confidence like 80% or 95%. And to get onto that, we also have a low 80 and a high 80. And the lower and upper bounds of the 80% predictions intervals delineate a range where roughly 80% of forthcoming observations may lie. And the 95 or low 95 and high 95 similarly is the lower and upper limit of a 95% prediction interval encompass a broader spectrum wherein about 95% of future NASDAQ values are anticipated. So basically, the forecast graph is basically empowers investors' analysis to gauge the NASDAQ anticipated behavior. And we can also see that I computed the correlation coefficient, which is 0.99, which indicates that there is a very strong correlation between the opening and closing prices of stocks in the NASDAQ markets. And a correlation coefficient close to 1 suggests that there is a strong positive linear relationship between the opening and closing price of stock. In practical terms, it's basically just the opening price of the stock increases or decreases, the closing price tends to increase or decrease as well. And a high correlation implies a high degree of predictability in the relationship between opening and closing prices. And market participants, including traders and investors, can use this information to anticipate potential price movements. For example, if the opening price of the stock is significantly higher than the previous closing price, there's a high likelihood that the closing price will also be higher based on the historical patterns. So to summarize in conclusions, we can see that the volatility analysis involves looking at how NASDAQ stock prices fluctuate over time, and it provides insights into the level of variability in their prices. And by using metrics like standard deviations and average true range, the analysis quantifies these fluctuations, giving investors a clear understanding of the risks associated with investing in NASDAQ stocks. And the information allows investors to tune their risk management strategies to better navigate the ups and downs of the market. Another is the time series decomposition. So basically, the analysis involved, we analyze the decomposing the historical stock price data and its underlying components, including trends, seasonality, and irregular fluctuations. And by dissecting these components, I gained a clear understanding of the long-term directions of stock prices, identifying recurrent patterns, and this would make the decomposition process allow us to unravel the underlying dynamics of the NASDAQ stock markets and extract actionable insights for investors. And also for forecasting, we can see that there are various forecasting models, including autoregressive, integrated moving averages, or ARIMA, exponential smoothing, and machine learning algorithms were applied to predict future stock price movements. And then there's also another term called uncertainty analysis. In addition to forecasts, there are also probabilistic forecasts to quantify the uncertainty associated with the future stock price predictions. And by incorporating uncertainty measures into the forecast process, investors could make better assets the risk-reward trade-offs and make more informed decisions in volatile market conditions. And also for seasonal trends, we can see that seasonal analysis of stock price movements revealed recurring patterns and anomalies associated with specific months or quarters of the years. And we see that seasonal factors like shopping or earning seasons and tax-related events influences investors' behavior and contribute to predictable price movements in NASDAQ stocks, offering opportunities for seasonal trading strategies. And finally, we can see that the strong correlation between the NASDAQ stock exhibits a strong positive correlation with each other. And understanding and leveraging these correlations allow investors to diversify their portfolios effectively, spreading risk across assets that moved in tandem and potentially enhancing overall returns. So this strong correlation suggests that the prices of these stocks tend to move in the same directions over time. So thanks for watching my project about stock markets and NASDAQ and investigating it. Hope this was beneficial and useful. And don't forget to like, comment, subscribe to my channel.